Okay, hi everyone. So this is my new video on Introduction to Financial Accounting, and the topic today is on accounting concepts, and this is part 1 of the series. Okay, now I'm Rodi Chia, and this is something which I think that is quite overdue to talk about and is of great concern to many of my students in class. Right. Thank you once again for watching this. You're watching this on my YouTube channel. So why this topic is important? Okay, during my course of teaching, I found that students tend to fail to understand why concepts are important. Why do we need to apply concepts? Okay, and to many students who are doing it for the first time, they may wonder, like, isn't accounting just double entry? Income statement, balance sheet. But the fact is that it's not. Right? Accounting itself is like, driving. There are certain principles and concepts that guide how we drive a car. The same applies to accounting. Right? In accounting, there are certain principles and concepts that guide us in how we perform accounting work. So we will have to look at this, and we won't be looking at all the videos, or rather not all the concepts, but at least some of them which are more key. Alright? Now, and this is applicable to students who are doing financial reporting, financial accounting especially. Let's have a look. Right? So as I mentioned to you before, what are concepts and principles? Just like driving a car, right? Accounting requires certain concepts and principles to guide how the driver will drive the car. Right? Like for instance, why should inventory be valued at historical cost? Right? Why should we record the value of the stock at the original purchase cost instead of the market value? Right? Because again, going back to accounting principles, certain accounting principles explain that the inventory should be recorded at historic cost rather than market value. Why? Okay, that's where we need to understand why the concept says so. And what about the experience of your workers, the experience of your staff? Workers and staff are very experienced, and because they're experienced, they're able to add value to the business and to help work being done more efficiently. But why not include all this experience and capabilities into the balance sheet of the company? Why not? Why not measure and then insert that as an item in the balance sheet? So the business has built very strong relationships with customers. Why not put a value to it and include it in the balance sheet as well? The answer to these two questions is that you can't, because these two are very difficult to measure, right? And it's very subjective when you try to measure someone's capability and experience, right? So what does it lead us to? Right? So the facts are, accounting principles and concepts are very important because these govern how transactions are recorded. How do we treat the accounting transaction? Right? Do we treat an accounting transaction as an asset? Do we treat an accounting transaction as an expense? Right? So, and why do we treat certain events in certain ways, such as warranty? Right? As a business, when you purchase and sell electronic goods, you have to provide warranty. Now, how do you treat warranty? Do you treat it as a liability, or do you treat it as an expense? Right? So, concepts and principles govern us in how we handle certain recording of transactions. And you can't avoid, not knowing the concept, because not knowing the concept and the principles means that you won't be recording the transaction properly. Right? So can you get around these principles and concepts? The answer is obviously you can't. Got it? Alright. And many a time when I mark students' papers and work, I find that they try to get around the principles and concepts by pretending that they know. But you can't pretend that you know, because it is going to be very obvious if you do not know these principles and try to, cook up some answer in the exams. Okay, so let's move on. Right. So let's look at some of the principles, and then hopefully through this, I'm able to educate you on some of the important principles. One of the key principles in accounting is the monetary measurement concept. Right. This concept explains why you can't record the skill and experience of the management. What about the skills and competence of the staff? You can't as well, because the skills experience and competence of people, all these are not measurable in monetary terms. Now, what are those things that can be measured in monetary terms? There will be transactions such as purchase of goods, sales of goods. Right, these are readily measurable because you could refer to an invoice, you know what's the quantity, you know what's the price per unit. It is possible to just measure the amount and record the value of the purchase and sales. Right? So what about those that you can't measure in monetary terms? Well, then those are never recorded in the books. Right? Okay, the next principle also commonly applied is the matching principle. Matching principle is very key because it says here that expenses and revenue should be matched to the correct period in which they arise. For example, rental was incurred in December, but then was paid in January. In which period should this expense be recorded? The answer is that it should be recorded as an expense in December 2014, because the rental pertains to the month of December and not some other month. Right? Which means that payment timing doesn't matter as such. You could pay later, but it doesn't matter. So what matters is when did the transaction or expense occur. Okay? Another principle commonly mentioned is the prudence concept. Okay? This concept states that assets and profits should not be overstated, liabilities and losses should not be understated. Now, which means that, you know, in the preparation of the accounts for the year, you know, and closing of the books, such over and understatements should be avoided as far as possible. Say for instance, a customer has promised to buy the goods from you, and he has yet to put a deposit. Should that be treated as a sales? According to prudence concept says that it is not the case. Right? What if the deposit has already been placed? Then the answer is yes. Alright? So prudence concept simply means that you should be conservative in in the treatment of such things as revenues and expenses. Right? The fourth principle, historic costs. Now we all know that when you record the transactions of of whatever items such as purchase and sales, all these are recorded at historic values. That means the initial amount. So if the initial amount that you paid for the goods was 1,000, that is the amount that you use to record, and you will not use current market values. Why is it important? Because by insisting that you use historic costs, this results in much more objectivity, because historic costs can be readily verified and the number is not possible to be disputed. And by using historic costs, it also results in much better comparability. There is much less judgment involved in how or what figure to use to record. Okay, so that means the recording of the transactions from year to year will be a lot more consistent and resulting in much more comparable financial statements, especially when you compare year to year. Principle 5, going concern principle. Now, going concern principle is frequently mentioned. Now, this principle simply means that it's an assumption made that the business will remain in existence into the near future. Now, why is this assumption important? Because when this assumption is true, all assets and liabilities can be recorded at historic values. Okay? Because so long as there is no necessity for the business to liquidate and dispose of all assets and liabilities can be recorded at historic values. However, what happens if not? If the business is undergoing liquidation and may close down soon, then all assets should be at market, or you can just rephrase it as disposal values. So the going concern assumption does matter a lot because it actually determines what asset values can you use. Would it be historic cost, or would it be disposal values or market values? Okay, but usually, so long as the business is a going concern, this should never be necessary, because all assets, you can just assume that historic costs will still be relevant. In the closure, so we covered some of the concepts and principles. However, there are much more concepts and principles in practice. What I've covered is some of those concepts that are frequently used in accounting, right? And should this be relevant to you as a student or an accountant? As a student, this is very important to you, especially if you're taking this in a program like the ACCA or maybe in the MBA, right? You have to be able to explain why. Okay, there is no shortcut. Make sure that you go home, or maybe read up more in detail. Make sure that you're able to explain this, right? In any accounting exam, especially on financial accounting, this is a relevant topic. Don't pretend that it doesn't exist, right? So meantime, I'm Will Chia, and you have been watching this on my YouTube channel. Have a good day.